everyone, my name is Ram Damija. Welcome to my channel. Today the topic is very interesting. It's about gold and silver and how the price of gold and silver has actually moved. Where is it headed? What are the triggers for the demand in gold and silver? What is the deficit that is there between the demand and the supply? Where are the prices headed? What are the brokerages saying? What is the gold silver ratio looking like? And how much should you invest? How should you invest? And a lot of other things to talk about. Hopefully by the end of this video you will have a clear picture of how the gold prices are likely to behave and what should you do about it. So let's begin today's video. Let us start off first with the gold chart. As you can see over here, this is the gold chart depicting the gold prices. And the gold prices, there are four lines over here, two bands basically. One band was from 3100 gold price to 3400 gold price. Now this band was established somewhere in April and it continued till August. Post that there was a clean breakout wherein gold actually went up from $3,400 right way up to $4,400. Now there is a new band that has got formed, which is from $4,400 on the upside and about $3,800 on the downside. So gold prices are likely to move within this band for some more time before they actually have a big breakout on the upside. So just like the last breakout which saw about 1000-point up move, the next breakout could also be equally strong and it can actually lead to about 1000 to 2000 point surge in price of gold per ounce. And mind you, this is in dollars, so in Indian rupees it's going to be much more accentuated because simply because the dollar has been going up against the INR and these prices of gold. So last time when $4,400 price was made about 1.5 months back, the rupee was at 88. Now when it is at 4200, rupee is already at... Hi, as some of you would know, I am an AMFI registered mutual fund distributor. I help clients build very strong, robust mutual fund portfolios which have a combination of market cap weighted mutual funds as well as factor based mutual funds along with the international and gold diversification. So if any one of you is interested in creating a strong, robust mutual fund portfolio, or even if you want to get your existing mutual fund portfolio evaluated free of cost, kindly fill up the Google form in the description below and I shall get back to you. Now let's turn to the video. 90. So you've seen already that the gold prices haven't reached their all-time high, but in INR it is almost at its all-time high, simply because there is a currency depreciation. So as all of you would know that gold is a very good hedge against the currency, and that is one more reason why probably gold should be part of your portfolio. Now let us look at the other interesting one, the smaller cousin of gold, which is silver. Silver has given a cleaner breakout. So silver has given a breakout after a long time, but it was kind of capped at about 40 for a long time, but after it has broken out at 40, first top of it made was on 17th of October at about 54. This is when all the silver shortage actually happened in the country. From there it corrected sharply to about 45. And now it has given a breakout at about 59. So silver is actually the stronger of the two in terms of momentum, if you ask me. And typically what happens is whenever the precious metal breakout happens, then silver tends to outperform gold. And this we have seen in 2011 also, and even in 2020. So whenever there is a rally that happens for gold and silver, silver will outperform. But mind you, there is one problem with silver, which is that the silver volatility is much higher than the gold volatility. Now what does that mean? That basically means that whenever silver corrects, it will correct much more than gold. Even in the last correction that we saw, gold actually went from 4400 to 4000. That's about 10% correction. But silver went from 54 to almost 46, 47, which is almost a 20% correction in silver. So silver will tend to correct much more than gold. And if anyone can stomach that volatility, then silver is the metal. And there is silver in terms of the demand supply gap, which I had shared in the last video also, is much higher than gold. So the supply for silver is much more limited than its demand. And every year that has been growing over the last 5 years. So the last 5 years, if you see price of silver from $12, it has gone to about $60. So it's been a 5x in 5 years price of silver. Whereas gold has not gone 5x in 5 years. So silver has been outperforming, no doubt about it, but silver went into a very big consolidation from 2011 to 2020. Now this is a very interesting chart. What this shows is the gold silver ratio. if you see the gold silver ratio is there's a band again for gold silver ratio. The gold silver ratio basically hovers around 100 on the extreme side, in which gold becomes very expensive, and on the bottom side it goes to about 60 odd, from where gold becomes much cheaper compared to silver, or you can say silver becomes much more expensive. So this ratio actually peaked at about 126 in March of 20, when gold really bounced but silver actually crashed. And from there you can see that silver has really gone up 5x, and because of that the ratio has come down to about 70 odd. Now 60 perhaps is the bottom for this. So if silver prices go up in a straight line, then we can say that the 60 band will be hit. But mind you, this ratio is also dependent on the price of gold. So if price of gold continues to rise, then price of silver has to outpace that to get this ratio down. So it's an interesting battle that is happening over there, but it's a good indicator to see what is priced higher and what is priced lower. In my opinion, both the metals are good, but my preference is of course towards gold more, because as I've been maintaining that gold can be 10 to 15% of your portfolio. Silver, I feel, should be 1 to 3% of your portfolio, because it is very volatile as an asset class. So when it goes down, there is no escape route. So you have to be very careful. But right now silver is outperforming, and in the precious market bull run, as I have said, silver will tend to outperform. Now let us look at what the other interesting things are. This is the supply demand statistics from the World Gold Council. Basically this shows what is the demand for gold and the price of gold. So this golden bar that you are seeing over here is the price of gold in LBMA, troy ounce, in dollars, whereas this dark purple is the jewelry fabrication demand, this green is the investment demand, and the pink one is the central bank demand. So you can see how central bank demand actually peaked in Q3 22 when the Russia sanctions were made, and after that it has been holding steady at about 1000 tons odd. But the demand for investment is the one that is the green bar that you can see over here. Wait, let me just, yeah, this green bar that you're seeing, this is the one that is increasing. So what does this investment demand say? This investment demand is basically all the gold coins, the ETFs, and things which are stored as investment. So you can see this big green candle coming over here. So this is the investment demand actually increasing. And if you see what is the breakup of this investment demand, there's physical bar, there's official coin, there are metal coins, ETFs, and so if you see the price, the ETFs are the ones that have actually gone up in the last 3 quarters. So ETF demand has 226 tons, 170 ton, and the last quarter it has been 221 tons worldwide. That is significant. That is very significant. So you can see the ETF demand is going up, and because of that the price of price of gold has actually been going up. So it's a very interesting thing that I thought I will share with you. Now let us look at what has been the gold forecast price for major banks and institutions. So as you can see, Bank of America has given a 2026 forecast of 4,538 with the upside to 5,000. And how they frame it is that they see the rally continuing on the back of Fed cuts, higher debt, and safe haven demand. If you see Deutsche Bank, they are given again a target between 3,900 to 4,900. So they are taking a safe route at 4,450, and they have recently raised their target. UBS has a 4,500 target. JP Morgan calls for above 5,000. So JP Morgan is very bullish, and they are saying 5,300 also. World Gold Council is saying 30% rise in 2026, which is implies a price target of around 5,200, and the institution consensus is between 4,000 to 5,300. So everyone is very bullish, and Saxo Bank is outrageous predictions, it says, at 10,000. So the whole idea is that and this is how the price of gold will translate into INR. So at 5,000 at current prices, which is at 4,200, 300, or it is at around 1,30,000. But if it goes to 5,300, the price is going to be more than 1.5 lakhs per 10 grams. So that is how the price of gold is likely to move. So all the banks, all the institutions, big brokerage houses and all are very bullish on gold. All of them are, if I take a median of that, it is the target comes to about 4,500 to 5,300. That is where the ballpark range should be. Even if we take, let's say, 4,500, that's also about close to 6-7% from where we are currently. Add to that 3% dollar depreciation, 10% appreciation is gold is kind of consensus view minimum on the downside. But if you look at the upside, then we are looking at a 30-40% increase also in 2026 according to these brokerages and institutions. So the thing is that everything looks good right now for gold. The only concern perhaps could be that it has rallied a lot. So last year it has rallied by about 56%. So of course, gold also needs some time to cool down. It's quite possible that there will be time correction, etc., that might set into gold as well. But if that doesn't happen, then we are looking at a much higher price. And I'm going to tell you some other variables which are going to affect the price of gold. Look at this. This is Tether joins global gold rush, now one of the world's biggest holders of physical gold. So Tether is a stable coin. Now what has actually happened is that these stable coins have started to get into gold as a backing. So Tether has got its investments, if I'm not wrong, into US treasuries. They have got it in gold and so on and so forth. If that starts to happening, then we are looking at huge demand, huge new demand coming in from these stable coins. So what they do is that they have, let's say, a asset of, let's say, $100 billion. Maybe they'll back it up with $20 billion of gold, $30 billion of treasury, and so on, and they will create a pool of $100 billion investments, and that is what the price of that particular coin is going to be pegged against, so that it doesn't lose value. So Tether has started to buy gold, and it's a very big development. Because it's a completely different asset class that was not actually present in gold. So if that continues, that is going to have a huge upswing. And this is the net purchase of gold of Tether versus the select top central bank. So you can see Tether has actually bought 24 tons of gold in last quarter, compared to Kazakhstan 15, 18, Brazil 15, Turkey 7. So all the central banks are also buying gold. And mind you, this doesn't have the Chinese numbers are suspected, because the Chinese numbers could be much higher than what the official numbers are. And the biggest, of course, the biggest holder of gold central bank is US, which 8,000 tons, followed by Italy, Germany, and Switzerland, and so on, which have in the range of 2,000 odd tons. Then China is also somewhere there. India is about 900 tons of gold. But what the reports actually suggest, that Indian households hold about 25,000 tons of gold. If that be the case, it's a huge wealth multiplier, so to say. And we are going to see a lot of prosperity flow in, simply because of the fact that there's a wealth effect that is going to trickle down if the prices of gold actually sustain and go up. So Tether was one. Now this is also a very interesting chart which I wanted to show you. This is what is the top assets by market cap. So if you see, gold is about $26 trillion market cap right now, and Nvidia is about 4, and Apple is about 3.7, Alphabet is about 3.4. Next comes silver at $2.94 trillion. So silver is way behind gold. It's like 1/10 of gold in terms of the market capitalization, but it has huge scope to go up. And if you look at Bitcoin, it's just 1.6 trillion. So if some of the stable coin money, it won't be through Bitcoin, but the other stable coins, if they start buying into this gold, then price of gold can actually go up further. It can perhaps go to, who knows, maybe $30 trillion, $40 trillion. And mind you, this is in dollars. So if you convert it in rupee, then it is it's something which is completely different. So this is a very good chart. It shows what are the top companies. If you look at even Vanguard Total Stock Index, which has the world, it's about $51 billion, and so on and so forth. So Invesco QQQ, it is basically Nasdaq. It's about $36 billion. So Ethereum comes in at $33 billion. So this is a very interesting one. I thought I'll share it with you just to give you a context of where gold is in terms of market capitalization. What are the other things that we have to talk about? One is Fed Chair Kevin Hassett. So Mr. Trump has indicated that they are going to indicated, not sure, that after Fed Chair Powell will actually demits office in May 2026, then the new nominee could be this gentleman. But what it will indicate is that it will be a dovish policy from the Fed after that, and the interest rates, which are at close to 4 to 5%, are going to definitely come down, and there's going to be huge surge of liquidity in the world. What that is going to do is it's going to lift all boats. It is going to lift every asset in the world, be it US stock markets, which I think the government has publicly said they will not let it go down. It's also going to go into other assets like emerging markets, also going to go into things like Bitcoin, this gold, silver, everything. So if you don't own assets, please do own assets. It's not the time not to own assets, because you would have seen asset price inflation is very high worldwide with the Fed printing money. Then this thing can only go. The other interesting thing that I wanted to talk about was the Bitcoin volatility and the collapse. So Bitcoin has actually collapsed from 125 to 80,000 thousand US dollars. It went up to 91,000 US dollars. It's back to about 89,000. So if this crypto world crashes, there are two things that can happen. One is that all the money moves into gold. A lot of it moves into gold. Or second thing that can happen is that the crypto world doesn't crash or collapse, but they also adopt gold, which we have already talked about how the stable coins are buying gold. So either of the two scenarios are actually good for gold. So Bitcoin was basically pushed as digital gold, but it has not really worked out, because anything that has got such high volatility and no end use case is something which is suspect. Why would anyone pay that kind of money for some digits of code? Though I understand the argument, I have been reading about it, which says that to produce one Bitcoin you need X amount of energy, and energy has a value attached to it. But at the end of the day, that the whole point that there are some 10,000 coins which are available counters that argument completely, whereas there is only one gold which is available, and gold has been there for 5,000 years as money, as not store of value but actual real money. Even if you read the Fed charter, it says that gold and silver is money, at least till 1971 it was, when they depegged the US dollar to from gold. So having gold and silver is must for anyone's portfolio, and I've been maintaining that it should be at least 10% to 15% should be gold and 3% should be silver in your portfolio. So if anyone doesn't have it, I think it's a good time for you to think about it. Think about your asset allocation, see how much allocation you have to equities, to gold, to real estate, to silver, to I mean basically a whole portfolio allocation. If you've done it properly, will ensure that you actually end up making very good returns. Because even in the last 1 year, when Indian equities haven't done well, what has really done well? International equities has done really well, gold has done really well. So if these were part of your portfolio, then your portfolio would have still been at an all-time high in spite of Indian markets not performing well. But let's say if you're just concentrated in FD, or you're concentrated in Indian equities or some small cap somewhere, then you know that your portfolio is not doing well. So very, very important to have a proper asset allocation, and that is where I've maintained that if anyone needs help, I'm ready to help with that. I'm an AMFI registered mutual fund portfolio distributor, so I help people make solid, robust mutual fund portfolios. If anyone is interested, they can fill up the Google form and I shall get back to you. So that's it from me now. If you like the content, please do subscribe to my channel. Please do like, share, comment. I would love to listen to your comments, and I shall see you soon with another update. Till then, take care. Bye bye.